Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Wednesday, July 15th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures Metals, minute episode 701. And looking at yesterday's price action in the precious metals, we saw a substantial rally here after the CPI data came out below expectations, which we were widely anticipating. Consumer prices fell for the first time in 6 years in June. Now, the interest rate hike probabilities disappeared in the July meeting, and the probability shifted substantially in that September and October meeting. Now, shortly after the number here, futures in the precious metals markets gave up some of those gains as that Fed Chairman Kevin Warsh's testimony took place. He indicated that this was just one data point, and he doesn't want to put too much emphasis in one data point and cherry pick. He didn't want to call it mission accomplished. Remember, his strategy here is to take out some of these outliers, take out the high point, take out the low point, and get more of a smooth moving average or median or mode of these particular numbers in these data points that are going to impact Fed policy. I can respect that. Now, looking at the CME's Fed Watch tool, the probability of the rate hike next month here or later in this month had plunged to about 15% from 40%. So traders are now shifting their bets at that September and that October meeting. And Kevin Warsh, he came out and he said, and this was kind of the icing on the cake, is that he vows to deliver price stability. So that potentially brings that interest rate hike back in, and that's where we saw that continued slide here. Now, he is going to be talking here again today, but the key level that I'm really going to be watching on the metals markets here in the two are going to be those high points following the CPI report here. So for gold, it would be 41.12 and a half. Silver, it's going to be 60.05. So you look at the current price action here, you got gold futures down about 0.8%. The high of the overnight session, 40.68. The low, 40.23, and futures sit at 40.34. So towards that low end there, you get the pivot point here. It's going to be right around 40.40. So futures really going either way, above or below that number. You look at the silver market here, that giving up some of its gains here and really weakening here just as I was setting up for this recording, down about 1.32%, sitting at 58.33. The high of the overnight session, 59.41, and the low, 58.23. So only about a dime off of those lows. We're continuing to see lower highs on the charts and kind of this floor near that 56 to 58 level. What that does is it forms this wedge pattern here. And if you really would like to see some of the technical analysis that I sent out to the clients here before this video here, please register for the Metals Edge. Now, that particular pattern should resolve itself here in the next few days and either result in a breakout back to the upside or another continued breakdown lower here. The next real big key levels of support are going to be that 52 to 48 as far as the silver market's concerned. Now, you look at the recent contract low, gold sits about 2% above its recent contract low at 39.5540. Silver sits about 4% above it at 56.14 and a half. Now, you checking on some of the retail flows here in the metals here. Well, they're still selling gold, they're still selling silver. The exchange traded funds, they cut 58,000 troy ounces of gold in that previous trading session, and year to date those ETF flows down 2.6%. You look at the silver market, they cut 546,000 troy ounces of silver, and year to date they're down about 9.5%. The cross asset picture, which has really played a role here and comes back into the spotlight, specifically crude oil, the dollar, 10-year treasury yields. I feel like we've been talking about this for months. You got gold, you got oil futures here rising now for the fourth straight day. So sitting at about $80 for the August contract here. The range overnight quite tight, just below $81, just above $79, so about a $2 range here. And you go to Brent crude, sitting just over $85 a barrel. The high of the overnight session, $86.53, the low, $84.54. So another $2 range there on the oil market. Now, Trump did tell Fox News that he would continue to strike Iran and may hit those power plants and bridges next week unless they come to the negotiating table. So we check in on the macro markets and the cross-asset picture because these are kind of where the speculators are going and other things that they're watching here. So one thing to note here on the Asian data that came out, this impacted copper, and this is why you've got a little bit more weakness in the silver market overnight. China's economy slowed more than expected here in the last quarter, and it was its weakest print in more than 3 years here. So that raises some of the pressure for the policymakers to speed up some of that public spending. If they do get that type of QE. We've seen gold, we've seen silver, we've seen copper all make these movements higher following that type of QE. So it's really the public spending here to ensure that their annual growth rate is met here. Something to note, though, is that China's new home prices fell at the slowest pace in June, fueling some of those hopes that the battered real estate market is starting to stabilize and recover. That's been just the eyesore for years in the Asian markets here, has been the real estate market continuing to depreciate here, because for many people, that's their largest nest egg. That's where their forced savings comes into play. So you go over to Europe and Asia here, European stocks, they were mixed here. And Asian stocks, they mirrored the moves in the US higher overnight, with the Kospi advancing 6.5%. Now today, there's going to be some things to watch here as far as the earnings front. BlackRock, Morgan Stanley, Johnson & Johnson, and Bank of New York Mellon. After the bell here, we should get, or later in the day, United Airlines. So today's economic data, it's going to be the MBA's mortgage applications here. You're going to have the PPI readings. So we always want to pay attention to that, because that's oftentimes a precursor to inflation going forward. Then we'll have the July Empire State Manufacturing Survey, and then we're going to have the Fed's Beige Book. Doesn't really carry as much weight as it once did. You look at the U.S. Equity markets here. You got tech; it's leading gains a bit earlier here. It's tracking and following those ASML readings in that print here over in Europe, and then the S&P 500 up about 0.1%. The Nasdaq up about 0.5%. The dollar is just a bit firmer here. Grains are much firmer across the board, with wheat futures pushing substantially higher. Same thing with the bean oil market. Looking at some of the softs here, no real price action there. And you got Bitcoin getting up to the 65,000 level. A lot of people are really getting excited about it. But if you look at the chart pattern here, it's either going to post this head and shoulders pattern, this inverse head and shoulders pattern, and we're forming that shoulder right now, or we could end up failing back down. So you really want to look. We've been in this about $2,000 trading range down to about $62,000 on up to about $65,000. So call it $3,000 range here for the last little bit. And it's really the decisive breakout one way or the other, I think, is where you're going to start to see the next directional movement. Remember, as it hits these levels multiple times, day after day, on the upside and on the downside, those structures there, they tend to start to weaken just a bit. So if you guys got any questions, you'd like to get an account going, seeing a lot of people coming out and trading that oil market here. Remember, there's the 100, the 500, and the 1,000 barrel crude oil contract. Same thing with the silver market. You've got the 100 ounce, the 1,000 ounce, and then the 5,000 ounce on the silver market as well. So a lot of trading going on in the grains, the NASDAQ, the S&P 500, Russell. A lot of people trading the crude oil market here as well. So there's a lot of markets beyond some of the metals markets here. And I did also discuss some of the pairs trades here that have been working out with those strong inverse correlations between things like crude oil, like the gold market, where one is fueling interest rate hikes and one is really weakening on those interest rate hike expectations. And that's where the pairs trades have been coming out for some of the hedges. So again, you guys have any questions, shoot an email, info@bluelinefutures.com. And remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.